All right, today we're going to break down a really fascinating argument that's been making the rounds. The idea is that two recent news items about Ripple, when you put them together, aren't just small updates. Nope. The claim is that they are signals of a massive, super quiet shift in the very foundation of global banking. You know, the kind of change that maybe happens once in a generation.
Look, a crypto company partners with a bank. We hear about this stuff all the time, right? So what makes this one so different? Well, the argument we're exploring today says that if you look at the details, it points to something way, way bigger than just another handshake deal. So the real question is, why? What's actually going on here?
Okay, let's dive right in. Here's how we're going to unpack all of this. First, we'll look at the two key pieces of news that started this whole conversation. Then, we're going to decode what tokenized deposits actually are, because that's a mouthful. After that, we'll see why a new stablecoin is even part of this picture, figure out where XRP fits in as this neutral bridge, and then we'll zoom all the way out to see the big, grand, structural argument that's being made.
So first up, let's look at the two news events that are the foundation for this entire analysis.
The argument really kicks off with two headlines. First, Ripple partners with the banking giant BNY Mellon to work on something called tokenized deposit services. Second, Ripple gets a key license in the UK, an electronic money institution license. Now, the source for this explainer says that if you look at these by themselves, they're interesting, sure. But if you connect the dots, they supposedly reveal a much, much bigger story.
And to really get why this is a big deal, we have to talk about scale. BNY Mellon isn't just a bank. It's a bank for other banks. We're talking about a custodian holding $55 trillion in assets. So in this view, this isn't a deal with one bank. It's a deal with the very infrastructure, the absolute core plumbing of the entire global banking system.
And this quote from our source really nails the whole argument. The idea here is that this isn't about some speculative crypto asset you're trading. This is about building the fundamental, invisible infrastructure of finance. It's like the wiring inside the walls, not the fancy painting you hang on them.
So, if Ripple is helping to install all this new plumbing, what's it actually made of? Well, the answer, according to the source, is this technology called tokenized deposits.
So what on earth is a tokenized deposit? Well, in the simplest terms, it's a digital twin of a real deposit sitting in a commercial bank. This digital version lives on a blockchain. But here's the key part. It's on the bank's own private invite-only blockchain. And that's absolutely crucial because it means the bank is always in full control, unlike, say, Bitcoin or Ethereum. The real money doesn't move, but its digital twin can now do all sorts of new tricks.
So here's how it's supposed to work in plain English, especially for a bank's big clients. First, their deposits get mirrored as tokens on that private blockchain. Then, those new tokens can be used to balance out digital asset markets. And the end game here is to enable things like programmable money and almost instant settlement, all while staying inside the bank's safe, regulated playground.
And this quote right here really frames the core argument. The source is basically saying, hey, forget the daily price swings. Forget the hype. This isn't about getting rich quick. This is about the boring, essential, and incredibly important work of upgrading the fundamental rails of finance.
Okay, so this new infrastructure then opens up the next layer of the argument, which is all about the role of Ripple's very own US dollar stablecoin called RLUSD. Which of course brings up the obvious question, right? I mean, the world is swimming in stablecoins. You've got massive ones like Tether, you've got Circle's USDC, so why in the world would a giant bank need or even want another one?
Well, this table really lays out the source's answer perfectly. The argument is that RLUSD isn't even trying to compete with Tether or USDC. It's playing a totally different game. In this view, Tether is for the wild world of crypto trading. USDC is for all the modern fintech apps. But RLUSD? It's being positioned as the first stablecoin built by banks, for banks, to be used inside this new plumbing.
And that brings us to the really crucial distinction the source is making. It's the difference between something that's just nailed to the outside of a bank versus something that is built into the very foundation of the bank. Other stablecoins are seen as these external tools that kind of plug into the old banking system. The whole vision for RLUSD is that it's actually part of the bank's core operational fabric from day one.
And this quote just drills the point right home. For the BNY Mellons of the world, it isn't about which stablecoin has the most trading volume on an exchange. The argument is their first question, their only question, is this approved by our regulators? Is it built for our specific systems? In other words, is it okay? And that supposedly changes everything.
Okay, so you have these tokenized deposits on private bank chains. You've got this new bank native stablecoin, but how do you actually connect all these different isolated systems? Well, this brings us to what the source claims is the linchpin of the entire argument, the specific role that the XRP asset is meant to play. To explain this role, the source uses this one key metaphor over and over, that XRP is like oil in the ground. So let's unpack what that actually means in this whole setup.
So think about it this way. You don't put crude oil straight from the ground into your car, right? It has to be refined into gasoline first. In this view, XRP is the crude oil. It's the raw, neutral resource that allows all these different financial engines, like a tokenized US dollar from one bank and a tokenized euro from another, to actually talk to each other and work together.
So functionally, the source positions XRP as the neutral bridge asset. The best way to think about it is like a universal travel adapter. If Bank A wants to send its tokenized dollars to Bank B's system, but Bank B's system only speaks tokenized euros, they can't connect directly. The argument is that they would use XRP as the instant neutral go-between to bridge that gap and make the transaction happen in seconds.
And so now let's zoom all the way out and put all of these pieces together to look at the grand vision, which the source calls the structural argument.
The argument is basically this. We should all just ignore the noisy up and down daily price charts. The real story, in this view, is what's called structural acceptance. That's happening behind the scenes, this quiet, foundational adoption of the technology right into the bedrock of global finance.
And this is all presented as a very deliberate, multi-year game of chess. Step 1, build the core tech. Step 2, make some smart, strategic acquisitions. Step 3, go around the world and get all the licenses you need, like that one in the UK, to make sure you're compliant. All of this, the source says, has been leading up to the final step, turning on that new plumbing of finance we talked about right at the very beginning.
And this final quote from the source, it really captures the whole feel of this theory. It's this belief that a massive revolutionary change is happening right now, not with a loud bang, but quietly, behind the scenes, in the very wiring of the system itself.
And so that leaves us with the big question at the very heart of this whole argument. Are we actually witnessing the quiet construction of a brand new financial system that's about to get switched on? Or is this just a case of connecting a few dots to fit a really compelling, but ultimately hopeful story? That's really the core of the debate.